Where have these fall-offs in confidence been most pronounced? Higher incomes, middle, or lower?
Yeah, it's an interesting economy. As Steve said, things are just kind of rocking, a little bit up, a little bit down, Goldilocks. It's everybody's sort of waiting here to see when's this recession going to happen, and the consumer is part of that. The Consumer Confidence Index from the Conference Board fell in August after 2 straight months of increases in June and July. It fell predominantly because of food and gas prices, a familiar theme here. As people went to the pumps, they had to put more in, and all of a sudden they're getting a little nervous that maybe inflation is continuing to hurt their pocketbooks, but now it's back down to kind of where it was a few months ago. So the consumer is sitting here waiting. Jobs are a little bit weaker, but they still feel pretty good about their own job situation. And you still have about 10 million openings, and you've got skill set shortages in certain areas. So a little bit of confidence there in their own situation, but a little worried about the future. The weakness in consumer confidence was across every demographic group, every age group, every income group. So this is really just a generalized point of view based on the current feeling here at the end of the summer.
And I guess also of note is the idea, Steve Odland, that the numbers for prior months were revised downward as well. I often look at these numbers and I read in them a sort of sense that I'm okay, but you're not. You know what I mean?
Yeah. Well, look, the Fed was looking at, super inflation, a year and a half ago. You took over 500 basis points worth of increases. We had 91% of our CEOs saying there's going to be a recession, and we had 101% of economists saying there's going to be a recession. CEOs throttled back, but everybody's saying, where's the recession? Let's go. Let's have it over with. But it's sort of sitting in here at a 2% growth rate. Revisions up in the first, down in the second, but it's sitting here around 2%. Inflation's on its way down from 3%. So maybe this soft landing that is this mythical soft landing could happen here. But we still think at the Conference Board there's going to be one more 25 basis point rate hike in November, and then that'll be it. And it could start then coming down, 6 months later, which is the typical gap. So I think everybody's sort of settling in here saying we're almost there.
Steve Liesman, what are the surveys that you supervise telling you about consumer confidence, about the economy, and the likelihood or the perceived likelihood of a recession?
Well, first of all, I'd say the overall takeaway has been that inflation is the most important thing out there. People do not seem to give the economy credit for the job market, and they really have focused on inflation being the number one reason why, for number one reason for pessimism. That, along, of course, with partisanship, is a huge part of all of these consumer surveys. So you have to kind of put that aside and kind of factor that in. The other thing that we did see in the last quarterly survey we did, Tyler, something of an uptick. People seem to be feeling the lower inflation rate, at least things not accelerating as much as they had been, but still relatively depressed. For the level of economic growth we've had and the low level of unemployment, people's attitudes towards the economy has been a little incongruous, I guess is the best way to put it. And it's unclear to me if bringing down the level of inflation is enough to turn around consumer confidence. At the same time, you have to wonder, Tyler, how much, at least on a short-term basis, these confidence numbers matter, because spending has been fairly robust. And I'll be very interested to see that July data tomorrow that's going to tell us, did the strong spending we saw that ended the second quarter, did it continue into the third quarter? And one of the things that could be out there as an outlier is you have that Amazon Prime Day, which seems to affect spending in July.
Yeah, that's an interesting point, Steve Odland. Let me let you tie it off here. Steve Liesman makes the point that sometimes sentiment is not necessarily perfectly correlated with behavior.
Yeah, and Steve is absolutely right on that. I think you have to look at consumer balance sheets, and there was a lot of cash sitting here from the pandemic incentives. That's worked its way down. You've got consumer credit rising. You've got the cost of credit cards rising. It's up above 20%. You've got rates on mortgages that are 7.5%. So, you've got to feel like the housing market's going to continue to soften, and that the consumer should at some point run out of this cash here and then have to go paycheck to paycheck. So I think what we've got here is we've got everybody kind of waiting. Is it over? When's it over? And how's it going to land before we start investing?